Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education.
Hey guys, it's James the Chart Guys. It's Wednesday, May 31st. Going to do my nightly video on oil. Again, I keep saying that as long as we are below the 8 EMA, the red line here, which is currently at 49.60, that we will continue to look bearish on oil. Bulls bought the dip a little bit today, but we did set a lower low here on the daily and unable to close above the 20 MA and losing it now. So we're going to continue to look bearish oil. And yesterday I mentioned with it under the 80 MA, we're going to use the hourly to look for a bearish position. And so I said if we, whether it happens overnight or not, if it backtests the 20 MA, this purple line here, we'll look for a rejection there, or if it gains it, we will take a bear position when it loses it. So as soon as it lost the 20 MA and got another TCG bear cross, when the 4 EMA crossed under the 8 EMA, we continue to look bearish and had great downside here on that play, where oil, once it lost it here, we went from the next hourly candle at the high of 49.51 and went all the way down to the low of 47.73. Thank you. We backtested 20 MA again here on the hourly, rejecting, and I'm still continuing to look bearish on oil as long as it's below the 8 EMA on the daily. As far as the weekly goes, same thing. We are setting lower highs, high, lower high, lower high, and lower lows. Low, lower low. And if this pattern continues, then we're going to look for a break of 44.13. If we do bounce above 44.13, then I'm going to look for equilibrium pattern. Equilibrium pattern meaning that we have this high, we have this low, we have a lower high. I'm going to look for a higher low above this if it happens, and then another lower high, and then another higher low. So looking for a tightening triangle basically here. So again, use the daily as your indicator that as long as it's below the 8 EMA, use that hourly to look for your position and which direction to look for. If the daily has a bear cross where the 4 EMA is under the 8 EMA, then use the hourly if it gains the 20 EMA to wait for the loss of the 20 EMA to enter a bear position. You're not looking for a bull position here on oil until it regains that 8 EMA on the daily. So continue to look bearish using the daily and hourly. And if the daily does gain the 8 EMA, let's see where that 8 EMA is at currently. It does gain the 8 EMA, which is currently at 4.48.86, then we'll start looking bullish. But until then, sorry, that's not the 8 EMA. The 8 EMA is at 49.39. Once it gains that, then we'll start looking bullish again. But until that, we're going to continue to look bearish on oil, which has been an amazing and easy short play indicator. And when things work like that, technicals work like that, you got to keep using it. So we had a loss of the 8 EMA here, back here. Then you knew you'd take a bear position and continue to look bearish. Once you gain that 8 EMA, you need to look bullish. Lost it, look bearish. Gained it, look bullish. Lost it, look bearish. It's been pretty simple and easy to play on that 8 EMA daily. So we'll continue to use that signal until that signal no longer works. So have a good night, and I will see you tomorrow.